Why do I keep getting stopped out? Today, we're going to delve into that question that has annoyed many a Forex trader. So let's get into that and talk about it and more right now. Hey everybody, Andrew Mitchum here at the Forex Trading Coach with video and podcast number 524. Now, are you getting stopped out all of the time? It's a frustrating experience. You've done your analysis, you've placed your trades, and you set your stop loss only to find that the market momentarily dips far enough to hit your stop loss, and then it goes back in your intended direction. It's like the market's got a personal vendetta against you, right? That's how it feels. Well, let's have a look to see what you can do about that to stop that happening. Because the most common reason that I find that many people have is their stop loss is too tight. A tight stop loss might seem appealing because it minimizes your risk, or so you think on paper, but often it doesn't account for the natural volatility in the market. Now, financial markets ebb and flow. They rarely move in straight lines. So if your stop loss is too tight, you're probably going to get stopped out during these minor counter movements. And it's something that you need to be aware of because not every single time are you going to place a trade that moves straight up into your direction all the time. The second reason, and again, probably a very common reason, is because most people don't know where to put their stop loss for each trade they take. Most people use the same stop loss all the time for some reason. Now, each market condition requires a different stop loss size. The size of the stop loss should reflect the time frame of the chart being traded, the pair being traded, and also the market conditions at the time. Because don't forget, different pairs move in different speeds and different amounts. And thirdly is emotion. And let's face it, trading's an emotional endeavor, especially when money's on the line. Now, some traders, they move their stop loss because of fear or greed, and it leads to inconsistent outcomes. And now a well-calibrated stop loss is based on a sound trading strategy and knowing where to put your stop loss and why each time. So the danger is if you become emotional, you'll do things that are erratic. So you need to stick to your plan and don't change your plan just on a whim. So what can you do to avoid being stopped out? Well, here's a few quick tips for you. So it's understanding what to do and when to do it, making sure that your trades have equal risk per trade regardless of the stop loss size. Most people think that their stop loss needs to be small because that means they're going to lose small if the stop loss gets taken out. That is not true. We can certainly help you there to understand that a lot more. So adjust your stop loss size accordingly so you can put your stop loss in the right place for that trade at the time. Your stop loss is there. It's a tool to protect your capital. Don't forget that. You will get stopped out from time to time. But you need to remember, if you've got a good sound strategy and the trade goes against you, you take the stop, that's absolutely fine. But also you need to ensure that you have high reward to risk trades, which you hear me talk about all the time. That means when you have a profitable trade, you're making multiple times your risk. So I hope that helps there. A few other things there. If you're out there looking for a broker, don't forget to have a look at Blueberry Markets. They're based across in Australia. If you'd like to find out about how we can help you, and if you'd like to have a call with us, click on the link that I'll put here. You can book up like a 30-minute call to have a chat with myself or one of my team. If you've not yet been on my masterclass, then it's a free masterclass. It's about 45 minutes long. It's on demand, so you can choose when to watch it. It's not live, but it contains a lot of very valuable information. All you need to do is click on the link I'll put here, and you can jump onto that as well. So once again, this is Andrew Mitchum at the Forex Trading Coach. We're here to accept the stop losses are a part of trading, but we're here to make those annoying constant stop losses disappear for you. That's how you become profitable. It's understanding what to do at the right time. We can help you there. I'll see you this time next week. Bye for now.